Welcome to Stock Review again. And the band keeps on playing. Okay. Um, First topic I want to put into um, to your head Swiss credit. Um, Most of the companies you see here that I'm posting on here, um, the Swiss have something to do with the inner workings of that company. Um, and I have five main points here I want to really talk about, and I'm going to do some reading here. Number two, German banks are being used as a proxy. I want to make the announcement right here and now. Deutsche Bank is not going under. The German banks are not going under. Um, and it's a toss-up right now. The Swiss, like I said, are using the Germans as a proxy. What's new? Nothing's changed, guys. So the German banks will either get money from Wall Street or get gold from Russia in order to continue its progress with gas, oil. Yeah, Deutsche Bank in Germany is going nowhere. You can get that out your mind. Um, that is one. Swiss credit, German banks being used as proxy. Oh, Ukraine. NATO is using the people of Ukraine to make way for a Russian Swiss alliance. Too obvious. Um, and number four, um, back to the markets. I'm still bull until I see a political move that switches this up. Um, what's driving the market right now is politics. Not There's not much else. So and number five. Oh, I'm an Amazon affiliate at this point. So if you want to support my channel, you like what's going on, feel more than free to I'll put my store in the link and buy from there. Um, I am just generally pushing ebooks, books that I've read that has really changed my thinking. Um, First book is The Art of War by Sun Tzu, and the second book is Rome, the Roman Republic. So that's it for main bullet points. I wanted to run this by you guys. Economic analysis at NATO. Understanding the linkages between economics and security, which is essential in today's complex international environment, in a way which is distinct from other international organizations and which is focused on the alliance area of competence. Economic analysis at NATO lies in assessing the security and defense implications for the allies of the current potential economic developments. In accordance with Articles 2 and 3 of the North Atlantic Treaty, economic factors often determine the ability of both state and non state actors to finance the means to deter and defend themselves, to protect power and influence, and to pursue foreign policy or political objectives. Target analysis of economic developments thus enhance the strategic awareness of allies regarding potential threats against their security and regarding their own capacity over the medium to long term to generate the resources to meet those threats. Such analysis also provides support to a broader political and military assessments as well as to the political consultation process among NATO members. Basic defense economics explores the link between overall macroeconomic conditions and the fiscal capacity that nations may have to finance different levels of defense expenditures. For the Allies, economic development may influence progress towards key NATO objectives, such as the Defense Investment Pledge, agreed by heads of state and government at NATO. Um, Other countries' understanding of fiscal capacity supports broader analysis of a particular nation's potential defense capabilities. Like I said, Deutsche Bank is not going anywhere. Um, Most definitely. Trade between Russia and Germany has increased by about a quarter in the past 12 months. The surge came despite sanctions which the European Union imposed against Moscow for its alleged role in the Ukraine conflict. Following the years of slumping trade activity, the exchange of goods and services between Russia and Germany saw a considerable increase. So let me end it here, guys. As far as we know, sanctions are window dressing. Um, Reason, I don't know. Um, if anything else, is to drive markets and or deter investors or to manipulate the markets. I know that tariffs and have been used to manipulate the Chinese U.S. market. So the strategy that they're using to manipulate trade or investors in Europe now has sort of kind of ventured over into Asia. At the end of the day, they'll make concessions. They're still doing business. Um, the whole idea of Deutsche Bank going down is a joke. That's a proxy, number one. Um, Two, as far as the U.S. markets are concerned, I am still going to be bull until I see a political shift. You have to remember the market was going down, the plunge protection team jumped in. Um, Now there's capital from all sorts of sources entering in the market. Why would that stop? It's not going to stop until you hear the managers of the economic system say, we're going to raise interest rates. One. Two, we're going to freeze up credit. Not happening either way. Number 3, what would be the other way to spook investors? The biggest number one way to spook investors. Oh, more tariffs. You're not hearing that. 1, raise rate. 2, more tariffs. What was our second one? Raise rate, more tariff, freezing credit. And how do I know this to be the case? From my 8 months of experience. They cut food stamps. They cut Social Security. So they rather cut social services than freeze up the credit markets. They rather cut social services than raise rates. They're doing a little bit of both, raising rates. If you call this rate that they currently have a raise, and they're using a 3-prong attack. Raise rate, freeze credit, more tariffs on the investor. For the person that's on social welfare services, they're using one strategy: a cross the board cuts. So as far as the social construction in America, it's a 4-prong attack. Across the board cuts, jobs, everything else. Raising rates, freezing credit, more tariffs. So we got across the board cuts, jobs, and social services. So the Democrats lost on that. Republicans won on that. That's why you see all this liquidity in the market. I've always said Donald Trump was a Democrat. So now they have a easing of the sanctions on China. Republicans won on that. And now they're talking about not raising rates. So social Democrats have lost in this case. That's why I'm a bull right now. These are the applications. This is the market analysis, the technical analysis. These are the trades. And as you can see, sort of kind of range about 32, 33%, outperforming 80% of the market right now. I want to thank all of my new friends out there that have recommended my station, my channel. Yeah, that's, yeah, I really want to be around like-minded people. I'm open to interviews, even though, about 500 views, maybe not really the best interviewee of all, but hopefully I'll get there. I appreciate the support of the investors on YouTube. Definitely on the other side of the chart, there's a couple new guys that I've ran into since I've been on here. I'll end up eventually mentioning them while I'm outgrowing a few of the early guys that I met. We'll get back to the charts when I decide to make a trade, make a move, bust a move. I'm not busting any moves right now. I'm gonna probably put in some. I don't want to feed the VIX, but I am going to put in some stop losses tomorrow. Um, and I'm going to, slowly, just like I did when I sold off in the bear, I'm going to slowly start shedding weight as this guy comes up on while this guy is going up. Um, Same thing I did in the bear. So like a rocket, I'm shedding weight as I move up. So I'm shedding risk as the market goes higher. So I'm probably going to put in some puts. I think that's what we call it. I'm still new at this. Let me take a look. What's going on here? Okay, well, we'll just keep it simple. I'm going to be selling on my way up. So maybe you'll buy a couple of shares. Um, Shedding weight. And the plan is where are you going to run to? I just showed you the stocks. Swiss companies that are backed by Swiss credit. That's where you're going to run. Anyways, thank you for tuning in.